Welcome to the GECA podcast, powered by the Global Equity Crowdfunding Alliance. Dive into the realm of borderless equity crowdfunding, where we bring the world's top experts and industry leaders directly to you, discussing innovations that are redrawing the boundaries of finance. Ready to expand your horizons? Here's your host, Andy Field.
Hello, everybody. Welcome to the GECA podcast, Crowdfunding Chronicles, brought to you by the Global Equity Crowdfunding Alliance. I'm your host, Andy Field. Today's episode is all about understanding the risks associated with running a crowdfunding platform, and crucially, whether those risks are insurable. So as the crowdfunding industry continues to grow and evolve, platform owners are facing unique challenges, including differing regulations across jurisdictions that can complicate operations. So to help us unpack these issues, today I'm joined by our special guest, Richard Austwick, the Divisional Director at BMS Group. Richard's got extensive experience in working with crowdfunding platforms, helping them manage and mitigate their risks through specialized insurance solutions. So Richard, welcome to the show. It's fantastic to have you here.
Thank you very much. Yeah, really excited to speak to you.
Brilliant. Okay, so should we start with the basics? So crowdfunding platforms have become a vital part of the financial ecosystem. We all know that. But what are some of the key risks that platform owners need to be aware of?
Yeah, so good question. So I think ultimately it kind of depends on the individual platform and where they're domiciled, but I think there are definitely some broad exposures that affect all types of businesses, all types of platforms. So you can have your trading exposures. So you've got your investors, you've got the potential for fraud to happen, whether that's the employees or third-party manipulations. You've got, from the investor side, the actual failure of investors. Failure of the investment, as an exposure. Yep. Then you've got other risk exposures. So if you look at your sort of financial exposures, so running a platform, running a business, running a P&L, managing that cash flow, trading conditions, pressures from shareholders, pressures from any clients that you deal with. So that's another type. And then the other one, which I guess is a rapidly developing area, is the regulatory exposure.
Yeah.
So how you are dealing with the regulator, the communication with the with the regulators, how you're tracking that. It's the really key point is trying to marry growing your platform whilst also ensuring that the compliance and the internal controls and procedures are really sort of staying in line. And I think that's a real balancing act for platforms.
Yeah. So that's, I mean, to sum that up then, I suppose that running and owning a platform comes with all the risks that any other business would potentially have, plus some really nuanced ones, associated with the actual fact that it's a crowdfunding platform. So given that wide range of risks that you've talked about there, how insurable are those risks for platform operators? Can they actually adequately protect themselves through insurance?
Yeah, it's a good question. And it's always something to start off with when you speak to clients, is actually just having a clear conversation at the start and just say, okay, you've got your balance sheet of risks, and what are those risks you most concerned about, and what can be transferred off your balance sheet via insurance and what can't. And I think once you start at that point and then move on from there, that's a better position to start from. So if we take that regulatory exposure, so if you're having to deal with a regulator, so you can get cover for, if the regulator starts to investigate the platform in terms of procedures, it's AML, KYC provisions. So you can get access to legal costs who can help represent you. Yep. If the regulator comes in and starts a formal investigation. So often in those situations, people won't really know. They might have lawyers that they deal with, but are they specialists in this area? So you want to get access to someone who knows how your local regulator acts, the kind of information they want, yep, how they want it to be presented. So that's a really key point. And then other things we just talked about, the other risk exposures on the balance sheet for these crowdfunding platforms. So you've got that financial element. So the actual personal assets of the directors themselves. So those individuals who are running the business, it's their own personal assets liable if things go wrong. Right. So often you can transfer that off from a directors and officers liability policy, which is really important. And then if we go back to the original point on trading exposures, so the investors, the performance of the investments themselves, if the investments fail and investors lose money, they want their money back. And so they try to seek recourse. And so you can get under the professional indemnity section of a policy, you can get that protection if you start getting investors start to make complaints against you, and particularly if they feel that you've missed something, you've missed something in your due diligence, you didn't make something as clear as possible. But we often find that, and just on that, the modern world in which we work in, that the rapid escalations of investors sort of working together, that happens quite quickly, and it's sort of the other side of technology, all the positive sides, but actually it can come full circle when you've got investors actually on WhatsApp groups, Facebook groups, Google ads, they start to appear above you as the platform and your own website. So all these risk exposures can be transferred off our insurance.
Wow. And then just thinking out loud, really, I think you've covered kind of most of the things that I would immediately think of would be an exposure. But what about things like reputational risk? So for example, if a story hit the news and obviously you needed to hire some PR people to mitigate that, is that kind of thing, can that kind of thing be covered?
Yeah. So again, so always good just to start from the base layer and then work up from that. Work from there. So these policies, they're a shield, not a sword. So they are to protect the company, the directors. They don't allow you to go after third parties, but they allow you to get defense costs. So particularly, for example, if your platform is sort of hacked into by an erroneous third party and all your systems are down, all your investors can't buy or sell or any of their investments, then there's that real potential for some PR damage. So under, for example, cyber insurance policies, you get access to PR costs. So if you've got to go and tell key third-party suppliers, whether they're investors, that something's happened, you want to do it on your terms. By doing it on your terms, you help mitigate something potentially larger happening.
Yeah, that makes sense. Well, so we touched on earlier, platforms potentially operating across multiple jurisdictions is one of the things that GECA is obviously advocating for. That is our sort of our sole purpose is to make equity crowdfunding truly borderless. So how do the varying regulations across different countries or even regions actually affect the risks that platform owners face? What do they need to be mindful of in that respect?
Yeah, it's a good question, and it's something that you're seeing, like with most things, there is a lot of development. So you are seeing a lot of regulators talk to each other. There is a lot more sort of on a wider basis, a lot more conferences where people are sharing best practices, best experiences, which ultimately is probably a positive thing. So whether you're UK based or whether you're based in Europe or America, the way technology works, you can have meetings virtually. So there's a much better share of information from that sort of side. I think the key with all these things is the local knowledge. So if you're setting up in a new territory or setting up in your own territory, is understanding having that local understanding. So, whether that's from a legal point of view, from a risk point of view, from a tax point of view, just really getting that sort of clarity early doors, so that when you open up in a new territory, you guys know what you're going to be facing and dealing with it early doors rather than further down the line and being on the back foot
from the offset. Yeah, that absolutely makes sense. So yeah, I mean, that's a really good point. So to give everybody listening a clearer picture of some of the things that we've talked about and some of the actualities that can happen, have you got any examples of claims that you've seen from crowdfunding platforms or anybody in the crowdfunding industry actually, and more importantly probably, how did insurance help in those cases, in those examples?
Yeah, sure. Yeah, and they tend to be more interesting. I think people can relate. I'll talk about some examples where I think people can relate to them more. So I was speaking to a lawyer last week, and we were talking about this, and they were like, "Oh, that's so interesting. That's what I'm interested in, and stuff like that." So yeah, absolutely. So I think we've been operating in the crowdfunding space for myself about 7 years. So we've got some pretty good data, and that helped us launch the European product because we had a lot of proprietary data on claims to really present to insurers. And just, I'll comment to claims example in a minute, but one insurer actually said when we approached them, said, oh, maybe we've misinterpreted crowdfunding as a sector because we thought it was maybe higher risk than it was. So once you present that data, and that was really, good point, have that data and to be able to make progress. So yeah, the first one I'd probably talk about is related to the directors themselves. So this is directors running companies, so running the actual platform, crowdfunding platform. And we had a client that had accusations from one of its shareholders that the directors weren't running the business they weren't running the business in the interest of the business. They were running it in their own best interest. So they weren't following their fiduciary duty. A lot of that is sort of allegations. And so those allegations need to be defended against. And the matter actually was first discussed back in 2019. Like with this particular case, the time it takes to reach a conclusion was a long time. So it actually took 5 years to conclude, because you had lawyers on both sides battling. It was quite
which
long.
Instantly says to me 5 years worth of legal costs. Wow.
Yeah, exactly. And so the total end amount that insurers paid out under their policy was just over £4 million.
Wow.
And the benefit of that was that the shareholders at the start, the founders basically said, okay, we'll agree to transfer our shares over to the shareholders, and we'll kind of we'll draw a line in the sand. But actually the shareholders in this situation went beyond that and went after the personal assets of the directors. So if you imagine you're running a crowdfunding platform, and you're faced with the situation, and actually it's not just your equity in the platform itself, it's your own assets, any property you've got, car, etc., stuff like that. So, and
I think there's going to be people out there who probably aren't aware of the fact that those personal assets, are at risk in this kind of situation and need to be protected.
Yeah, exactly. And so this will depend on territory to territory in terms of the local sort of environment from a legal perspective. But yeah, it's something that I think people probably aren't aware of, but it's really important just to transfer that risk off the balance sheet, cover your personal assets and get transfer over. So 4 million in total. It's a significant amount, and the time length. The other claims much shorter, and slightly more more in the more modern environment. So we had one platform where someone was able to get into their systems and were basically watching how the CEO and the CFO were talking. So watching how they spoke to each other, the mannerisms they used, the type of language that they were using to each other. And they didn't do anything. They just sat on it for 2 or 3 months, watched and learnt. And then eventually they sent an email to the CFO saying, the CEO sent an email to the CFO saying, the bank account details of one of the companies looking to raise money has changed. And what happened was 2 transactions totaling about $500,000 were transferred into the wrong bank account details, into the fraudsters' bank account details. Hugely stressful time. We were able to utilize the insurance policy to, cover that loss. So the $500,000 loss, and crucially do it quickly and early, because in that situation, if it had rumbled on and on, you would have had investors start to really get concerned about what's going on. And then you've got all their legal costs that you might have to factor into in terms of settlement. So dealing with it early doors really sort of helped actually keep the total loss at a lower level. And then initially from that, they had regulatory obligations to notify their local regulator that something's happened. And so there might well be something to follow from that, further costs from that sort of side.
I mean, eye-opening and eye-watering examples, really, and I guess they really do show how critical the insurance can be in protecting platforms from. Look, let's be honest, that could potentially be catastrophic financial losses in those.
And they were in the startup phase. They were probably year 2, so huge. Well, would affect any business, but particularly those at that size.
Oh goodness me! So. You've touched on this earlier, but based on your experience, how should crowdfunding platforms approach risk management when they are operating in those multiple regions? Is there anything sort of specifically? I mean, obviously, other than the fact that you've said that get the local knowledge early, that makes sense. Is there anything else you could pick up on?
I think it's probably a case of when they're planning and mapping out their roadmap. So whatever stage they're at, whether at the year 1 or whether they're in year 3 of a 5-year plan, it's trying to then integrate that into what's the proposition for our insurance. And that probably seems quite low down the list. But if you're looking to set up in new territories, you want to make sure that your insurance policy and your insurer is comfortable with that, and they're able to provide cover as you go. What you don't want to be doing is spending all this time setting up a new territory and then finding out, actually my insurer actually can't cover me for activity in a certain territory. So really aligning that strategy as early as possible, is really important, because then that just means you've got peace of mind of knowing, oh, I'm with this insurer. They know that we've got plans to expand into X, Y, and Z.
Yep,
They're comfortable with that. And it's something that you're probably going to be pretty stressed, and you're probably pretty busy with your time, and it's something you can just tick off and focus on your other
and probably one of those things that you it's very easy to almost forget about the need to do that. So
we don't take it personally. Often insurance probably isn't probably in the top 5 or top 10 things, but it is something that people need to consider. And getting that discussion in early doors is really, really important.
Brilliant. So that's great. And look, that's been really, really useful and really, really interesting. We're running out of time. Before we wrap up on this, have you got any practical tips that you can offer platform owners that will maybe help them better manage their risk generally and ensure that they're adequately covered? I mean, we've talked about so many different scenarios here today, so it's going to be difficult for you to go through those individually, but just general sort of tips to help them better manage their risks. That would be great.
Yeah, sure. So I think the first one, kind of linked to my previous point, is just invest the time early doors to make sure you're speaking to specialists who have been on the journey with other platforms. They know what's going to go on, because it just means that you can sort of get this done and move on to your other points on the agenda. And generally speaking, insurers work on, they're generally conservative nature. So if they don't have certain information, they will always act on the side of caution.
Yeah.
So we always say, get on the front foot. So we do quite a big due diligence exercise before we engage with insurers, because we know what insurers, the information they want. And if you get on the front foot and you present it in the right way, you give insurers the comfort to really put their best foot forward. And that's what you want. You want them to say, actually, they provide this information on X, Y. Because of that, I can actually offer a lower premium. So spending that time to start with specialists just saves you a lot of time and money in the long run, from that sort of side. And as I said, the very first point is, I guess, having a conversation with who your insurance broker is, actually, what risks are actually am I transferring off the balance sheet of the business for insurance, and what actually am I not? Because I think once you start from that position, you have better clarity in terms of what you are covering and what you're not. Because I'm sure there's people who get frustrated and think, am I actually being insured for I want to be insured, or likewise, and in terms of exclusions or restrictions in coverage. That makes perfect sense. Listen, Rich, thank you so much for sharing those insights. It's obviously clear that when running a crowdfunding platform, that there are significant risks, as there are with most businesses actually. But the good news is that the risks are insurable with the right approach. And actually, as you mentioned there, if people take the time to actually do that initial, help your broker, the initial fact find, if you like, can sort of reap rewards in terms of what you're covered for. And then obviously the premiums obviously can be looked at as well in with more information. So I guess it's all about understanding the specific challenges of the industry and being proactive in managing them. So yeah, that's fantastic. I mean, for our listeners, if you're involved in operating or in investing in crowdfunding platforms, this conversation should have hopefully highlighted just how important it is to have a solid risk management strategy. Your insurance broker can obviously help with that. Insurance can play a massive part in ensuring that platforms can survive actually when things go wrong. So Richard, I just want to say thanks again for joining us today. I'm sure we'll talk again in the future. And thank you again for our listeners for tuning in to Crowdfunding Chronicles, the GECA podcast. Please stay tuned. We've got more episodes on the way soon where we'll explore the opportunities and challenges involved in shaping the crowdfunding world. So look out for the next episode soon, and bye-bye for now. Thanks again, Richard. Thanks, Andy. Cheers.